Welcome to Global Finance Watch, your trusted source for in-depth analysis of the financial world. In today's video, we'll be examining the contrasting views surrounding Caledonia Investments' massive $9 billion bet on Zillow, the online real estate platform. As Caledonia predicts a potential tripling of Zillow's market cap, activist short sellers argue that the company is overvalued. Let's dive in and explore both sides of this intriguing story. Caledonia Investments, a firm backed by Sydney's elite, holds the title of Zillow's largest shareholder. This hedge fund is known for making daring predictions concerning Zillow's potential for expansion. In their most recent communication to investors, Caledonia has made the audacious prediction that Zillow's market cap could triple by next year. This bold forecast is based on various factors including market share, the integration of innovative products, operating leverage, and a potential increase in housing volumes. Caledonia argues that even a minor shift in mortgage rates could spark a significant surge in housing transactions, resulting in a substantial revenue boost for Zillow. On the other hand, activist short sellers like Spruce Point Capital Management argue that Zillow is already trading at an inflated valuation. They claim that Zillow's main business has reached maturity and that new products are creating earnings volatility. Spruce Point's report suggests that there is up to a 60% downside risk to Zillow's share price. They also point out that Zillow has a history of making promises it hasn't kept, and that the company quietly retracted some of its aggressive 2025 financial targets without public comment. Both sides present compelling arguments, but there are several key factors to consider. Caledonia's bullish stance relies heavily on a housing market recovery and a return to mid-cycle transaction volumes. They believe that pent-up demand and potential interest rate cuts could fuel this recovery. However, Spruce Point highlights the impact of recent legal settlements that could force changes to real estate commission structures, potentially affecting Zillow's bottom line. They also argue that increasing competition from better capitalized rivals could pose a threat to Zillow's market position. In conclusion, the debate surrounding Caledonia's $9 billion bet on Zillow is a fascinating example of the divergent views that can exist in the world of finance. While Caledonia remains confident in Zillow's long-term growth potential, activist short sellers are sounding the alarm about overvaluation and potential risks. As Zillow's management prepares to visit Australia later this year, this topic is sure to generate further discussion among investors and industry professionals. Only time will tell which side's predictions will come to fruition, but one thing is certain. The stakes are high, and the outcome will be closely watched by the global finance community.